I've been paying different type of insurances all my life. What are representations and warranties insurance?
Yep. So this is a very popular item, especially in the mid market right now. And mid market meaning we'll just call it, for me it would be like 50 million or less in purchase price. Between 15 and 50 million. And so reps and warranties insurance kind of gets its name from the purchase agreement again. In a purchase agreement, there are representations and warranties for both parties. And so, what I mean by that is, if in the purchase agreement, the seller is going to represent that all material income and non-income tax returns have been filed, right? That's a typical rep. And usually they're broken out by like federal, state, local, sales and use taxes, payroll taxes, unemployment insurance filings. Like it's all broken out, but it's a representation on the part of the seller that like, hey, we've done this. So representations and warranties insurance is exactly what it sounds like. It's an insurance policy against those reps and warranties in the purchase agreement. And generally what happens is if the insurer covers, let's just say there's no exclusions, and we can get into that in a minute, but let's just say everything goes perfect. The insurance policy covers all the representations, and a year after the transaction, someone or a state or any type of taxing jurisdiction comes after the company for unfiled returns. Well, if the company represented that they filed all of their tax returns required, and like I said, they're usually more detailed than that, the buyer could go to the insurer and say, hey, I want to make a claim on this. Like this was a representation in the purchase agreement, and we're going to make a claim for, whatever loss arises from, this issue. So it's a way to avoid escrows in some sense. And it's also a way to protect the parties so that, the representations and warranties are insured that are in the purchase agreement that the parties are, representing. But what will happen and what you'll notice is that when you do tax due diligence, one of the primary reasons companies do tax due diligence, other than just wanting to find out if there's any historical tax risks on the company they're acquiring, is the purchaser is getting reps and warranties insurance. And the reps and warranties insurers want to see a report. They want to see all of the issues. And then I can tell you that, let's say that we identified during the course of our tax due diligence, let's say that we identified a $100,000 sales and use tax risk or liability for the last 2 years. The reps and warranties insurer is going to exclude that item from coverage because it's known. So any known issues, so if you go through this diligence process and you go through the process of getting reps and warranties insurance, an insurer is not going to cover or insure something that they know is a risk. So this is how it all ties together. We talk about escrows, indemnifications, representations, and warranties insurance. From a tax due diligence standpoint, it all ties together. And, generally what we see is if there's any issues, or let's say there's non-filings, or the company should have filed in 10 states but they only filed in 5, the insurer will exclude from coverage those issues so that they're not on the hook for them.
Got you. This all makes sense. Well, thank you so much for your time, Ryan. Always informative, always insightful. Appreciate it.
My pleasure. Thanks for having me.